time now for Futures in Focus. We're looking at the Euro futures. It's falling for a second day. Euro touching a fresh one-month low as mounting tensions over Greece has pushed the currency towards parity. In a note today, Goldman Sachs says the euro will be fetching just 95 cents per dollar in 1 year's time. Let's see if our guest agrees. Joining me now from the CME is Bob Iaccino. He's chief market strategist at Tethys Partners. Bob, thank you so much for joining us. You know, it's really been interesting, the action that we have seen in the euro in recent days. After we have heard don't fight the Fed so much here in the United States, is it time for don't fight the ECB? Is that sort of the philosophy here?
I think it is. You mentioned the last few days of movements, and they really were interesting, because I think that the general knowledge would have been that as the Greek situation just gets more and more depressing, so to speak, that you would see the euro fall. And as the Grexit started to feel like a reality when everybody came in on Monday morning here in the U.S., you saw an initial dip, an initial panic in the euro-U.S. dollar, and then you saw a massive rally, which I don't necessarily agree with. It seems like every time they near a deal, you see weakness in the euro-U.S. dollar, and you see strength as the idea that the Greeks may actually exit the euro coming to fruition in the euro-U.S. dollar pair. And I'm not sure I agree with that. I think the overall case for a stronger euro versus the U.S. dollar specifically, and the sterling as well, is very weak over the medium to long term.
And is that because of the ECB? I mean, are you sort of discounting Greece at this point as a factor and focusing more on central bank action?
I am, and I think that if Greece remains in the euro, which this morning it seems like it's the case, could change tomorrow, but if Greece remains in the euro, there's more bailout money flowing around. If they exit, then there's difficulties in Europe just in general with some of the contagion. And I think we all believe that the ECB has ring-fenced Italy, Spain, and Portugal, but I'm probably in the 75 percentile where I don't have enough information about that to be long the euro in any sort of with any sort of duration to it. And I think most of the investing public believes that as well. Without knowing if there can be a contagion, whether the percentages are low or high, that risk is there. That risk makes me shrink any long euro positions I would have.
Okay, so Goldman's target is 95 cents. What's your target, and how are you playing it?
Well, let's talk about three things with that. My target's 104. So I can't see any reason, again, to be long the euro versus the U.S. dollar. So I think euro-U.S. dollar in short order is going to hit 105, 104. 104 would be my ultimate target where I would see a little bit of a rebound. 95 cents, I think, is doable. I think it's possible. I've called for parity in the past, but I just don't know about that in a year. I mean, in a year's time, that's really a panic. That's really a big move. You get to that mythical parity level before anything happens by the Fed, and that in turn kind of handcuffs the Fed. I believe the U.S. Fed is going in September, but I think if you see him move that fast, I think that's the only thing that could potentially handcuff Janet Yellen and the FOMC.
All right, Bob Iaccino coming to us from Chicago this morning.